Ford has come out with their exciting new Mustang Mach-E as their debut into the electric vehicle world, and the new generation of the Bronco is finally on its way as well. What does that mean for us as stockholders or potential stockholders of Ford? Join me in this episode and we'll take a deep dive. Good afternoon, this is Trey getting back in touch with you from Japan. As mentioned, we'll be looking into the Ford stock today. They've recently dropped two big releases in the Bronco and the Mustang Mach-E. The Mach-E apparently has been booked. Apparently it's selling pretty well. Not really sure when it's actually going to come out. Not really sure if Ford's even going to be able to get their hands on proper batteries for this. We'll be able to see in the coming months, hopefully. The Bronco was also announced a couple of weeks ago in varying sizes with a bunch of really cool pictures that they released. They're going to have a 4-cylinder engine and a twin-turbo V6 option, and they're saying that a hybrid is also in the works. In 2019, Ford also announced that they will be investing $500 million into Rivian, a little Detroit-based electric vehicle, particularly truck electric vehicle startup, the likes of whom Amazon and Cox have also put a bunch of money in. So there's kind of a spotlight on Rivian and a bunch of these other little electric car makers that kind of are hoping to stand up against Tesla's dominance, especially in the US. So with all this exciting information, is it time to buy? Is it time to sell? What should we be looking at as investors in Ford? In one of last week's videos, I mentioned that my first home run stock was Ford, and that was back in 2009, 10-ish. They have been not necessarily doing super well in the last few years, so I wanted to take a few minutes to dive into what exactly has been going on. It's summer of 2020. Typically, summer is the worst time to sell cars. People are not in the market to buy cars in droves. This year is much worse, as you can imagine, thanks to the pandemic going on around the world. But rewinding many years before that, Ford has also already been in a strange situation where it's piling up all kinds of debt and delaying a lot of the restructuring that they've been needing to do. If you look at a lot of automakers, they've been working on world cars for years, cars that they can use in Asia or Europe or North America. Development costs, planning costs, marketing costs can all be shared between that one platform. One of Ford's biggest weaknesses, which has led to the not super awesome situation they're in right now, is that they've tended to build various different architectures on various continents. And I'll talk more about that in a second, but basically all of that has led to Ford just dropping all of their cars and deciding to focus just on light trucks in North America. So it might be a little while before you see a small compact Ford coming out. So Ford has realized in the recent years that they're going to need to restructure a bunch of different things. And that also includes their leadership. Jim Hackett, who has been the president and CEO for a little while, has announced that he will be retiring. He'll be switching his position within the company to become a special advisor. Jim Farley, a younger successor to him, will step up next year. And Farley is also very aware of all the restructuring that needs to be going on. There are kind of two main areas that Ford kind of needs to be restructured and has been needing to for a very long time. Number one, as I mentioned earlier, was the platforms. In 2007, Ford had 27 different platforms around the world. So they would have various models, and they might even have the same model but slightly different in Europe or in Asia or things like that. And what ends up happening as a result is that you need to do all the crash testing, you need to do all the engineering, developing, and sometimes even marketing to sell these different versions of the cars. Other auto manufacturers are years ahead of Ford in this respect in terms of having just a few kind of platforms or architectures that they build on top of. So Ford has realized that, and they're going to be cutting it down to 5 coming up in the coming years, including battery electric. The other way Ford has realized that they're going to be needing to restructure the company is just in having way too many layers of management and staff and management and staff and management and staff. So the distance between leaders and decision makers and just normal guys working on the factory floor is super far. And so making decisions, releasing models internationally and things like that ends up being a really complicated chore when it has to be approved by so many different layers of leadership. So Hackett and Farley have both been aware of this and are working towards a more smooth and streamlined system organization. Some notes on Farley for you. His grandpa was one of the first employees at Ford many years ago. He grew up working in Ford and then eventually got picked up by Toyota and Lexus and was also involved in their Scion brand, which is now defunct. He worked in Europe, Asia, North America in various different respects, and then later came back into Ford. He's been the COO, Chief Operations Officer, for Ford for a little while now. He's taking a 21% raise, and his salary will now be a sweet $1.7 million going into his new role. So one of the really interesting things to me, especially recently, I've been looking into a lot of tech, a lot of finance companies and things like that. Ford's management has been aiming for a 10% margin. This is weird for me, looking at all these different tech companies who are like 30%, 40%, 50% net margins. I guess auto manufacturing is a very different business because there's so many huge tangible assets involved, but they're aiming for a 10% net margin. They're falling very short of that. The new CEO aims to be bringing that back up into shape in the coming years. Going along with all this restructuring I've been talking about, they're expecting a $7.1 billion bill to be associated with all the different things they'll be restructuring. And this is to prepare them for the next generation, including things like the Bronco and the Mustang MachE, and probably going on into even more electric cars in the future. For you dividend lovers, bad news. Ford has traditionally been a pretty good dividend stock. Although the stock price hasn't grown significantly in the last kind of 10, 15 years, the dividend has been reason enough for people to stay invested with them. But due to the pandemic and things slowing down, even already in 2019, they had to cut their dividend. Because of growing debt and slowing sales at the same time, check this out, this is filthy. In 2019, their dividend payout ratio was 1,600%. Basically, when you're looking for a good dividend option, a good dividend stock, you're kind of looking for a dividend payout ratio of like 10, 20, 30, maybe 40%. That means what we make, we're paying out 10, 20, 30, 40% in dividend to reward our stockholders. Ford was at 1,600%. So they made $100 and they paid out $1,600 in dividends. That basically means they have to take debt on to be able to pay that dividend. I think the reason that they were doing that was because they know that if they cut that dividend, a bunch of their shareholders are going to leave. But ultimately, with everything we're going through this year with the pandemic, they ended up having to cut it off eventually. So a quick look at the income statement over the last few years shows that revenues haven't changed that drastically, profits haven't changed that drastically, but their net income is dropping and dropping and dropping. I think this points back to a bunch of the systematic inefficiencies, but it also isn't going to be improved in 2019. Nor is the pandemic going to help that situation. Taking a look here at the trailing 12 months in the very left column, we see that revenues are dropping, gross profits are dropping, and the operating expenses aren't dropping much. But on the other hand, here we have 2017 on the left going up to 2019, and then MRQ means most recent quarter. Take a look at especially the long-term debt to equity in the most recent quarter, 3.89. So that means for every dollar of equity they have, they owe somebody $3.89. Similarly with the total debt equity below that. You can see that number going up and up and up. So it's kind of a red alert situation for Ford right now with debts growing significantly. Those of you who've been watching me for a little while know that I'm generally a long-term investor. I like to look at ticker charts going back as far as possible. Here's Ford's 6-month ticker. You can see the big drop that everybody was affected by in March, going down to 450-ish. Now we're back up to around $7. But let's zoom out a little bit to the 1-year chart. Check it out. It was up there solid, kind of around $10 for a long time. Zooming out even more to the 5-year chart, all the way back up to 16. So if you're the type of investor that likes to be optimistic and say, wow, it's so beaten down right now, but look how high it used to be for a very long period of time. Maybe this is a good opportunity to get back in. This type of graph might appeal to you. But I think it's really important for us as long-term investors, kind of buy and hold and watch it grow and believe in the long-term vision of the company type investors, which I am. We should be really cautious about Ford's debt load and its growing debt load and its shrinking revenues as well. A couple of other little things that I wanted to point out were some recent partnerships that Ford got involved with. In 2017, Ford announced a partnership with Team Edison. I haven't actually looked into that to follow up on it more, but they wanted to look more into developing electric vehicle partnerships and technologies. In August 2017, they partnered with a Chinese electric vehicle maker, super sure I'm not pronouncing this right, Zotye. And then in 2019, they partnered with Volkswagen to start working on autonomy and pickups and vans. Those types of vehicles haven't typically been Volkswagen's strong suit, but we're starting to see partnerships internationally between different vehicle makers who feel like, for example, Toyota and BMW working together on the new Supra that just came out. A a little while ago. I think we're gonna start seeing this more as big traditional automakers are less and less certain of how they're gonna be able to keep up with growing automakers who are basically tech companies like Tesla. So in a previous video, I mentioned that I rode Ford, and that was kind of my first home run back in 2009. Is now the time? What do you think? I would be interested to hear your opinion on that. I personally am not gonna get involved with Ford. No dividend, not a lot of prospects for growth in the immediate future. Yeah, they have the Mustang MachE. They're gonna be battery locked. Yeah, they have the Bronco coming up. It's good, but it's not gonna be like a mass market vehicle that everybody's driving around. I'm really interested to see how Farley kind of helps the company shape up, which is one of his biggest goals. But aside from that, I'm really kind of leery because of that huge debt load. Is there anything that I missed? If you're a Ford stockholder, if you're buying into Ford, I would really like to hear your thesis on why you think they're going to be growing in the coming years. Personally, looking at how much tech is starting to transform the world in the last few years with a lot of these really big players, I'm really kind of curious to see how traditional automakers who haven't quite kept up, like Ford, are going to be doing kind of in 5 or 10 years. I wouldn't be surprised, you know, they cut off all their traditional cars. I wouldn't be surprised, you know, once they get down into trucks and pickups and light trucks and things like that, if that's going to have to be even more and more niche going into the future. I hope that video was helpful for you. Looking forward to hearing your thoughts and hearing your comments in the section down below. Thank you very much, guys. Have a great one.